Hi everyone, welcome to today's video. Today we are going to talk about a PSU stock from the metal sector. The name is Steel Authority of India. In the video, we are going to talk about four things. First, fundamental analysis of the stock. Second, the impact of Russia-Ukraine crisis on the stock. Third, is there any potential upside in sale? And fourth, and the most important thing, should you be taking any positions in sale or not? Moving on to the financials, let's have a very quick analysis. Over the last 4 years, the total revenue of Steel Authority of India has steadily increased from 59,027.05 crores in 2018 to 70,771.69 crores in 2021. The net income has also increased from minus 281.04 crores in 2018 to 4,148 crores in 2021. The earning per share has also appreciated from negative 0.68 per share to 10.04 per share. That's a good news. Talking about the valuations, first let us understand how do we value a stock. The most common way to value a stock is to understand the price to earning ratio of a stock. So price to earning ratio in case of Steel Authority of India is 9.6 rupees, which means you need to invest 9.6 rupees in Steel Authority of India to make an earning of 1 rupees, as compared to the average industry PE of 24 rupees, which means that on an average you need to invest 24 rupees in the peers of steel stocks of Steel Authority of India to make an earning of 1 rupees. This means that SAIL is available at a better valuation than its peers. Not only this, SAIL is currently trading at a price of 94 rupees, which is way below than its book value of 128 rupees. Now I agree that it's not always true that when a stock trades below its book value, it's always a good news. Reason being the stock might be in huge losses or the company might be dissolving. However, in case of Steel Authority of India, neither is the case, because it is a good fundamental stock with increasing revenues, net income and profits. And in this case, the stock currently trading below the book value means it is available at a huge discount. Talking about promoter holdings in Steel Authority of India, the promoter holdings have remained constant in the past few years at 65%. No promoter has pledged their shares. Mutual fund holdings have been constant in the past 3 to 4 months, and the FIIs have increased their holdings from 4.4% to 4.58%. That's a good news as well, because FIIs are doing average buying in Steel Authority of India. Talking about dividends in SAIL, SAIL is a good dividend stock and it offers a dividend yield of 2.89%. Recently enough, SAIL announced a dividend of rupees 2.5 rupees per share in the March quarter. Moving on to next segment of the video, which will help us understand more about the steel sector. How has the Russia-Ukraine crisis and the geopolitical tensions between them has affected the steel sector overall? Russia-Ukraine war has led to an adverse impact on the Indian economy, and Indian players stand to gain a lot from this. Since the outbreak of the war, there has been major rise in the steel prices, and the hot rolled coil prices have increased by 15% in the European markets just after the few days of the war. Looking at the picture, you can see that hot rolled coal prices have increased from $1,157 per ton to $1,500 to $750 per ton just after the war has started. Additionally, due to the sanctions imposed on Russia and Ukraine, they are in no position to export even if the war stops today. So there is a shortfall of supply in the international markets, mainly in Europe, Western Asia and North American countries. Russia and Ukraine cumulatively used to supply 40 million ton of steel in the international markets, but due to the sanctions imposed, there is a shortfall in the international market, and the Indian steel players like Steel Authority of India, JSW Steel and Tata Steel stand to gain from this opportunity, because this has opened new export opportunities from them and also given them to command the price of steel. Last but not the least, steel prices have already seen a few rounds of price hike in the domestic markets due to the steel shortage and high demand in the construction sector. However, the good news is that the price hike could further continue. Why? Because China, who is the biggest exporter of steel, plans to be carbon neutral by 2050, and in its endeavor to do so, China might refrain from selling steel in the international markets. Is there any potential upside in Steel Authority of India in the near future? First, let us try to understand when does a stock price appreciates. A stock price appreciates when there are on an average buyers more in the market as compared to the sellers. According to the data on Trendline, it is seen that the delivery percentage in Steel Authority of India for the past months have been on an average of 60 to 70%. More and more buyers are accumulating the stock for the past few months. Not only that, our star investor, Mr. Rakesh Jhunjhunwala, holds nearly 1% stake in Steel Authority of India. Apart from these factors, there are so many more factors which can lead to huge upside potential in SAIL in the near future. Let me discuss those points below. SAIL is a fundamentally good stock, as already discussed, with growing revenues, good free cash flows, and good dividends. It is available at a good valuation, better PE than the industry average, and a lower price than the book value. In a growing economy like India and government support to increase the budget for capital expenditure, the infra sector in India stands to gain a lot in the next 5 years. And steel being one of the major resources needed for development of road and buildings has led to the domestic demand increase in steel, which has also helped the steel companies sustain despite the pandemic. Debt reduction. According to a report by Motilal Oswal, the board of Steel Authority of India have announced that they have reduced cumulative debt of rupees 16,200 crores since the beginning of financial year 22. You can see the breakup on quarter by quarter basis on the screen. Not only that, if the geopolitical tension between Russia and Ukraine continues, this is going to give better opportunity to the Indian companies to export their steel into the international market and might also give them a chance to command the steel prices. Apart from that, it is expected that the financial year 22 quarter 4 results are going to beat the street estimates by the huge margin. If that is the case, then I am damn sure that the steel price is going to hike in the near future. Moving on to the last and the most interesting part of the video, let's talk about should you be taking any positions in SAIL or not. For that, let's look at the technical chart of Steel Authority of India. Currently, Steel Authority of India is trading at a price of 94.5 rupees per share. However, the book value is 128 rupees per share. If the geopolitical conditions between Russia and Ukraine continues, giving an opportunity for hike in the steel prices, and the quarter 4 results does beat the street estimate, then I believe there will be a huge momentum in SAIL and we will be achieving the target of 125 to 130 rupees in a very short period of time. I currently hold positions in Steel Authority of India with a target price of 127 rupees per share and with a holding period of 3 to 4 months. Big brokerage firms like Motilal Oswal, ICICI Securities and Sher Khan have given an average target of 162 rupees per share with a holding period of 8 to 12 months. Do know that this is not a recommendation advice. I have done my due diligence before putting my money into the stock and would request you to do the same before taking any positions in Steel Authority of India. So that's it from my end, guys. Do like the video and subscribe to our channel. Do let us know in the comments below which stock do you want to be covered next for the next video series. Also, we are going to start a Tiny Treasure monthly series wherein on a monthly basis we are going to talk about one small cap stock which has a huge upside potential with a holding period of 6 to 8 months. Thank you. Stay tuned, stay subscribed.